So I chose to do the accounting equation, and what it is and why it's important is because it is the basic tool of accounting, and it measures what a business owns and the claims on those resources by creditors and owners. And the accounting equation has three parts, which are assets, liabilities, and equity, and it shows the relationship of those parts, and it is an equation that must always stay in balance. An example of this would be if the assets equaled $350,000, and liabilities equaled $150,000, and equity was $200,000. And as you can see here, it says the assets are $350,000, liabilities are $150,000, and the equity is $200,000, and the liabilities plus the equity add up to your assets. And off to the right, it says assets minus liabilities equals equity, which is just another way of doing it. And the identification, like I stated above, I chose the accounting equation. And I believe that the accounting equation is important because it is a good tool when it comes to double entry accounting, and using it can help assure that the debits and credits are recorded correctly. It also helps to measure how successful and profitable your business is or could potentially be. And the accounting equation is the core of your business's balance sheet, which can show your business's assets, liabilities, and owner's equity in great detail. The accounting equation can also be important for investors to review the company's financial statements, or just overall finances. Calculations, concepts, and decision making. The accounting equation has three different parts, like we talked about before, which are assets, liability, and equity. Assets are the economic resource that will benefit the business in the future. Liabilities are the claim of creditors on the organization, that is a debt owed to the creditors. Last is equity. Equity is the claim of owners on the organization and is the amount left after subtracting liabilities from the assets. These accounting standards help guide the development of external financial statements that are relevant, faithfully presented, and are useful in making decisions about investing and lending money to others. So the entry level is applied through understanding the importance of the double entry accounting system and how any transaction affects the accounting equation. Mid-level is the sole proprietorship. The owner may also serve as a mid-level production manager and will want to carefully manage liabilities so as to grow its equity. And executive level is for the executive of a multinational corporation. It would mean building balance sheet strength so as to enhance its shareholders' equity. And one ethical issue related to the accounting equation, it would be appropriately reflecting your assets and liabilities so that the equity is accurately stated and not over or understated. And a Bible verse that I chose would be Proverbs 10:9, which states, "Whoever walks in integrity walks securely, but whoever takes crooked paths will be found out." So now we come to the pictures. There weren't a whole lot of pictures, but I thought these would explain it the best. So assets are, as shown above, the money and the computer, which are basically things that you own and have value to you, which money obviously has value, as well as computers. And liabilities such as equipment and money owed to another person, such as debt, are liabilities. And equity could be your house, could be a building that you own. It could also be the $40,000, which would be your liability, as well as the house, which would equal up to about $100,000, depending on the house that you own. And if you own a house that is worth $100,000, which is your asset, and you owe $40,000, which is your liability, the house then represents $60,000 worth of equity. So that is how I would do the storyboard and basically show what an asset is, what a liability is, as well as what the equity comes out to. And my references are the Accounting Basics from Indiana Wesleyan University, and What is the Accounting Equation and Why Does It Matter from Rieva Lesinski, and then as well as Bible Tools. But the assets, liabilities, and equity all show that the ethical issue would be appropriately reflected, because in order to be honest and show how you are not over or understated, you have to add all those things up and they have to become equal at the end of it, like shown above. The assets could potentially be, oh, wrong slide, $350,000 like shown, or it could be the $100,000, which is your house. And then if you owe money to whoever you bought the house from, or the bank, or anyone like that, or the government, it could potentially be $60,000 or $40,000 that you owe on the house, which would be your liabilities. And then your overall equity would be about, let's see what the number was at the end. Your overall equity would represent $60,000. So that is the end of my slides and my PowerPoint and my video. I hope you all enjoyed and that it makes sense.